If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Happy Thursday. So market got all excited about some NVIDIA, and here we are fading for the day. So I still look back at these weekly candles on SPX, SPY. It's still a bunch of noise. So we've got this high here around 59, what is it, 59.60? 59.60 resistance and 57.70 support. That seems to be where the market is kind of stuck at this point in time. We'll see. End of the month is tomorrow. GDP numbers came in a little bit softer as expected. It was expected to be negative, so it came in negative 0.2. I love how that's green. We forecasted negative 0.3, came in 0.2. It's like, okay, great. Anyway, unemployment claims jumped a little bit. Home sales down, pretty big margin. And that's it. But I think that was kind of baked in. NVIDIA earnings yesterday, like they beat once again. They did like a double EPS revision, which I thought was interesting. So for the day, we'll kind of keep an eye on things. Are we going to, take out some lows? I mean, it was kind of a wild move on Tuesday. So are we going to maintain this, gap at all, or is this going to be a gap fill? Actually, one way I might end up looking to trade this would be, could I do, like, are we going to fill this gap? Let me see something here. If we fill this gap, could I make some money on this trade? 58.05. Let me look at a trade right now. 58.05 going out to tomorrow. This would be a very cheap trade, 58.05. And if I went 10 wide, got this backwards. Let me see if I can get this thing filled for like 9. $9.80 maybe. See if I can risk $20. $9.80, no. $9.75. Okay, so this trade's out to tomorrow. What I'm doing in this one is I'm looking to see, this is a very inexpensive trade, but if we were to fill this gap at all tomorrow, my risk is going to be $25, and it's a huge profit trap of $975. So it's possible that if we head down this level, that this ends up trading for maybe a few $100 profit. So I'm not trying to, obviously I'd love to make $975, but realistically, even if I turn this into a trade that offers me, $100 to $200, I'd take the profit early if we ended up filling this gap. Okay. Otherwise, what I talked about in a morning session already was we clearly, came down kind of aggressively, looking for maybe for a gap fill here. I do have a broken wing butterfly at 58.75. So if price for the day is greater than 58.80, I'll keep my full 80 cents credit. If it's in between, so between 57.71 and 57.79, that potentially is my profit trap. So that'd be this piece of the trade. And if it's less than 57.60, then I'm taking on my risk. So we'd have to be basically filling this gap. We'd have to be filling this gap for me to take on the risk. If we, hold the lows from yesterday's close, that would be good. If the market is able to get back up to, intraday highs, that would be great. If we end up making any new highs, that would be great. But as a consolation, if we are going to fall and fill this like 5805, 5800 gap, it's a very low risk, high reward trade. Probability is pretty slim, especially if price is going to go higher. I'm going to basically toss away 25 cents on the trade. Okay. All right. Let's take a look at a couple other things. Indecision. Look, I see indecision on the SPX and the Qs. Qs poked up a little bit higher because of NVIDIA's influence, but we're still sideways with this 59.60 resistance and 57.70 support on the SPX. If you take a look at the Nasdaq right here, we're not closing higher. This is around a 21.450. So 21.450 resistance. Obviously, it's a little bit messier with the wicks. It's not exactly indecisive, but the question is can we close higher? Are we going to close higher than these last couple weeks? If so, where's our level? 21,600, 21,800, all-time highs at 22,200. Okay, Qs, we're at 521. Are we going to get back to 540? Are we going to, fall back and fade? This, I mean, you can look, you can see this as easy as I can. There's a big level that's like, okay, are we going to all-time highs? Are we going to fill this gap? I mean, honestly, I think both are going to happen. It's just which happens first. Do we hit highs first and then fill the gap? Do we fill the gap first and then rebuild? Part of me thinks the market is just trying not to disrupt anything that's been like melt up, melt up, melt up, melt up, melt up, right? I do have a little bit of concern with this. If you saw this jumping around the news yesterday, like the taco talk, which is Trump always chickens out. That was the taco basically that was trending yesterday, and I think he's the type of president that would be willing to double down and prove that he's not going to chicken out, and so he could just say something like, "No, we'll go back and do 50% tariffs," and then the market hates it. We had a court ruling that that everything was deemed. Kind of unconstitutional with the way we rolled out tariffs as a way to fix the deficit. So anyway, there's still like that weird lingering drama of the stuff isn't done. These 90-day pauses is not done. Nothing's going to be inked. Not every country is going to line up and do deals in 90 days. It's just not going to happen. But the markets don't really care, So I'm just looking to see, where the markets hold on today and hold on for the rest of this week. Seasonality wise, the whole adage of saying sell in May, go away. What does that mean? Well, is everyone going to dump their stock positions and take profit in May and then watch like a June sell off? Maybe, but typically June and July are still historically bullish. I look at it this way: if you look at the season, January to, I guess you can look at. I just call it the pre-summer push, right? So if you go into your Edge Finder tool. And you look at seasonality, typically what we have, let's go monthly for the S&P. Okay. Look at the the big improvement in May. It's like May is way up, just melt up, melt up, melt up. But the pre-summer push, this is why I call it the pre-summer push, because what starts out for the year as, okay, January, February, maybe some flows, March, April are usually known for some pullbacks, right? Sometimes it's in the last, like COVID, it was a February to March cycle. February to March has been a pullback. Okay. So if we have like a good December, a good January, usually February, March is pullback. But once we establish that February, March pullback, it's usually, bottoming out here in April, and then May, June, July, like August. That's usually a pretty good run for stocks. Because I think we started with this heavy pivot in April, April into May into June. I don't know if we carry this momentum all the way through the end of the summer. It's like unless there's just no sellers. But we obviously have some dramatic timelines here in July, because what happens in July between the holiday and our big first 90-day window pause, like that's done in July 9th or something. That's basically when the first 90-day pause is up. So what does that mean? Do we pause another 90 days? Do we have more negotiations? Do we see who's coming to negotiate with the U.S.? So I just think that there's a concern with what this whole tariff drama, trade war looks like going into the end of the summer. The Fed is not likely going to do anything rates wise until maybe September. So anyway, point is, like, this isn't done. And I think you can see this as clear as I can. We're close to all-time highs. It's probably easiest for the market just to keep grinding and melting up higher, right? But just don't be blindsided to the fact that something may cause this, right? I mean, I've been saying now for the last couple weeks, it's like I'd love a pullback to position for that move to the upside, but I do think that the pain trade is the upside, right? Like I'm not shorting this market, but the pain trade is annoyingly, begrudgingly moving higher because you're not participating. And it feels like you're buying high and yet you're getting rewarded for that, which is great. But I think it's on borrowed time until something else is going to, maybe give this market a reality check, you know? And it's quite possible that we barely make new highs, and then the market spends some time back in the middle, and then we're wondering like, well, what is it going to do? Here's a high, here's a low. We're kind of fighting around in the middle. Um, Maybe if that's all the year does, right? But it's not how these markets are built. Like large cap weighted, the big move in spending. If the U.S., I still say this, if the U.S. is not seeing job losses, and the Fed is not having to like step in and intervene and do something reactive to a terrible event, like a black swan anomaly or something along those lines. Like we saw the regional bank crisis back in January 2023. Money supply is growing. Like all these things are still encouraging higher highs. It just seems a little, kind of unrealistic that we can just sustain incredibly higher highs. However, I will say this: take a look at the SPY. Go to a monthly time frame. Actually, you know what? Go to a yearly time frame. I've got another chart here that'll be a little bit cleaner. I call this one clean and fresh, and it's not clean and fresh anymore, but I'll go blank. Okay, look at the SPY. Okay. COVID, if you go 2019, COVID crash to 2021, I just want you to get a perspective of this move. Okay. So we had the open in 2019. That was after also a Fed pivot. We raised rates in 2018, crashed the market. I mean, the market crashed December and January 2018, and then the Fed immediately pivoted in 2019. So from this run right here, I'm not going to count the discount from the broadening pattern lows on COVID. That was down about 10% from the open. But from this opening candle in 2019 all the way through the point where we had the deleveraging at the beginning, this would have been the what? End of 2021, beginning of 2022, obviously the market started to top out. But I want you to put this in perspective with this move. This low to high run was 94%. Okay. And look at the behavior with COVID. We all know that COVID was a broadening pattern, right? And this market just kept going up, 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 up. Now, the difference between COVID and now is there's no real Fed accommodation like there was back in 2020. So I'm a little hesitant to be like, this is what 2025's candle is going to look like with having a big body of the upside. But I could see, since we have fought back so far to get positive for the year, I could see this market still giving us a green body candle, right? And then we have another run here, and a little more green. But, notice what happens. We have a little stretch, 3 candles sideways, 2 candles sideways, 3 candles big down year. I mean, if we finish the year positive, I think a bigger pullback is coming. So this market might spend as much time as it can just fighting tooth and nail to just stay positive. I just think inevitably we're going to have pullbacks, right? Like we're going to have pullbacks. It's pretty simple. But as the retail crowd has done very well this year, you buy in the dips. If you're buying the dips, you've been rewarded pretty nicely, right? All right. So here's what I'm watching intraday. As long as we can get back towards today's highs, that broken wing butterfly looks pretty good. Qs, fine. Pretty aggressive sell-off right out of the gates. Here's a look at NVIDIA. Let me go back to SPX since I'm watching that trade this morning, right here, and then go to NVIDIA. So gap up, it did exactly what we thought, which is going to be about an $8 to $9 move, and it was exactly that. I did not get filled on the broken wing butterfly that I wanted. I don't think it was even offered up. So my NVIDIA trade is, it's not going to fill. So this trade, I tried to play the A bigger than expected move, trying to pin this thing at the top, didn't trade. So it's not going to work. No big deal. So trade won't fill. It'll just cancel. That's fine. But on a positive note, my collar trades at 130 this week. Here's what I'm going to look at today. American Airlines, Amazon. So I've got some profits rolling in. So I have some puts on AAL. I have some ratio spreads on Amazon. I do have some naked puts on BTI. I do have some naked puts and 111 on the Dow. On JD, I need to add some covered calls. And NCLH, I need to add to my diagonal spread. NVIDIA, I need to look at my collar, which is a 130. It's out to July, so I don't really have to do much on this one. But then I have some puts as well that are in profit. So NVIDIA with the puts, I want to see what this did because of opening today. So let's go NVIDIA here. So I have some shares. There's my collar trade. My naked put is up around 78%. So, I mean, I could just take the profit. I don't want to wait. I'm not going to wait all the way to December. But taking about 70% of the profit, grabbing $270, it's okay. I mean, I can hold off and say like, I'm going to grab an extra $70. It's like, I mean, it adds up. $70 on 4 accounts. It's $280. But I could also just take this, get the buying power back, and then, add more. So, I mean, that's way down there. I was actually surprised it's not higher than 78%. So I'll keep an eye on that one for now. I mentioned JD. I need to sell some covered calls on JD. Bitcoin, I might not have to roll my call. If it doesn't get called away tomorrow at 61, then I don't have to roll it. That's good. How's my put doing, by the way? I bought some puts. The $45 put. Yeah, so I bought a put here, not in profit yet. Not in profit yet. Okay, so I'm watching those. Google, fine. Amazon ratio spreads up about 600 bucks. Those are out to June. So getting better. All right, this one might be worth closing. I'm up about 91% of my max credit here. So max profit's 206. I'm up $188. Let me see if I can close this thing down. That would be 103 closing for 10 cents. See if I can close this thing for 8. No more than 10 cents for this close, hopefully. So that'd be 93 cents in 2 contracts. It'd be 186 profit. Let's go 10 cents. Okay, 10-cent fill. I'm going to close out this ratio spread on Amazon for a winner. I'll update this in Pulver alerts. So this is $1.03 was collected. I'm taking 93 cents profit. Okay, and if I have to, I'll just let this one marinate and sit on the weekend. So that account is pending. This one, let's put a pending close at 10 cents. Fill the 10 cents. We'll fill the other ones at 10 cents. What the heck? Okay. All right. So the June, I'm trying to close up the June ones. So pending. This one is at 10. I'll just bump it up to 11. That should fill at 11. Filled at 11. And this working order at 10, I'll go to 11. So I'm filling at 10 cents and 11 cents. Filled. Okay. So the June 20th ratio spread is closing for profit. That was a $1.03. So $1.03 closed for 10 cents, keeping 90+% of that credit. So 93 out of 103, keeping 90.2% of that profit. Good. And then the other ones that I have are out to December, so I'll let those continue to work. Okay. What else? So Amazon, that one's off the list now. AAL, got some puts. I might just close these down. So max profits around 175. June, July. You know, I don't think I have to do anything here, but the longer I wait, it's just more potential exposure. So I might just close these down and move on. I don't really want any airlines in the mix. I've already been burned by holding JetBlue like a fool. JetBlue and Spirit were supposed to merge, and I sat in JetBlue for a while and never got paid. So I'm sitting on that for a while. All right, so I'll close that one down. BTI naked put combo up about 76%. This one I don't mind taking shares of. We're trading way above it. This is like a low beta stock, non-correlated. Same thing with MO naked put here for $850. There's a long ways to go. This one out for the end of the year. Okay. Anyway, let's keep going top down. Hanging out today with a little lackluster performance. Hopefully, we're not going too much lower. I'd like to see what that broke wing butterfly is going to do for me on the day. Let me double check my SPX here. So this is a call fly. And then we have the iron. There we go. So I'm trying to figure out what that was. Group. A low risk iron fly. Okay, so I'm watching this one for today. See if I can turn this into $80. If we go higher, looking for a call fly. Got between SPX and SPY, have some levels in here. So the 602, 600, 598. Uh, 593, 5 and 7. Okay, just getting those organized. All right, let's go dollar, gold, silver, oil, currency strength. Dollar taking a hit today, euro on the rise. See where my euro dollar position is right now. Back up into profit. So the 1180 is my buy trade. Back up around 170 pips or so. 100 and yeah, about 170 pips. Looking to see if we get back into 1550, I think. 1500, 1550 is my take profit. So if we're going to retest this high, it's the same as the dollar index retesting the low. I wouldn't be aggressively selling below the lows. I really wouldn't. I mean, if this gets back down to the lows, I would be taking profit on anything dollar index related. I think I did have an opportunity on my Aussie CAD to get a dip. So hopefully I'm getting some swing trades in here on Aussie CAD and New Zealand CAD. I mean, I like this level a lot. These trades, and again, why do I like these trades? Because they're boring and I'm not really worried about them. They'll find pivots, efficiencies. Like this is an inefficiency in my opinion that, I mean, I don't mind just taking a trade in here. One, taking a swing trade at like a 50618 pullback. Two, taking a trade at the lows. Three, and letting this thing, like, I can lose, I can win, and make money on the trade. Like Aussie CAD, New Zealand CAD, I never mind dollar cost averaging into those currencies because they tend to not trend. Okay. Japanese yen, would never want to do that. Dollar basket when it's trending, would never want to do that. So, it's like this is what years of trading forex has taught me is there are certain currency pairs that behave very efficiently, and those are some of my favorites because I trade the crap out of them when they don't really trend. If they do, like, look, they'll trend like, oh my gosh, this thing went up, 700 pips, right? But then what did it do? it proceeded to fall back about 70 to 80% of that. So the same thing is here. It's like I like the structure. I'm hoping that this will find a swing trade and head back up to the highs. If it falls lower, I'm still going to buy it here at this low, and I'm still going to buy it here at this low. And as long as I know my break even, I'll turn it into profit. Okay. All right. So let's go to some Swiss crosses here. Yen, press your luck on the yen. Aussie Swiss, still waiting to see if this will grind back up to the 200 moving average. Aussie New Zealand is falling lower. I'm looking to see if we can get filled. I want to get filled at 106 if possible. So I'm just holding a buy trade on Aussie New Zealand. Now I've actually got some positive swap in Aussie New Zealand, which is nice. But I'm willing to buy in some more at like 106, 103, and parity, and just kind of ride this bigger range. Aussie dollar. I mean, how I don't know who's trying to trade this right now, but it's like how much fun is this environment right now to trade Aussie dollar? It's not, so it's like if you're holding this thing small, right? And then be willing to kind of say, okay, trade one, trade two, maybe a deeper trade three, stop loss below the swing. There's open space here that I think we'll get to. I think we'll see like the dollar rebalance a little bit, but probably continue to bounce between the lows around this like 98 handle and maybe come back to parity. I mean, I don't know. It's like it's really important that the dollar doesn't get too much damage below 97. If we're doing that, then all of a sudden our U.S. bond market's going to be showing some frailty and some jeopardy as well. Like that's not a good thing. So I think this like parity handle is a big deal. And for years now, we've kind of settled in where it's like, okay, we tested, but we faked out. We tested, but we faked out. We obviously breached it. But is this also like, well, that's enough damage for the dollar? We're still going to be range bound. I don't know. I mean, I don't think there's too much to the downside here unless this is another like divergent level and then all of a sudden the dollar puts in a bottom. So we will see. Meanwhile, oil, gold, silver. Oil is still right in the mix of sideways, floor at 55, ceiling at 65. Gold, I'm still going to wait. Lower highs for right now and lower lows for right now. And I'm hoping this will continue a little bit longer. So can we continue to like 3,000, maybe down to 2,900? I think for the dollar to make a move to the upside, that will bring gold lower. The equities markets have clearly moved higher. We've seen the Nasdaq go higher, the S&P move higher. This big melt up since the bottom on April 7th. But gold is clearly consolidating. I don't know if I would take the bait if gold is going to get back to the highs. I don't think that's a buy trade for me. I think it's still a wait and see. I think this might just be consolidation. So I'm just looking to kind of patiently map out some lows here and let my moving averages catch up and see if price will just find it. Right? If price finds these at levels, then I'll get into some gold futures, I'll get into some GLD, and I'll add more exposure. But I'm not chasing gold at highs other than holding the positions that I already have, which are fine. I'll hold them, but I'm not adding to them. Silver, repeating this a lot now, like, I like 29 if we pull back to that support level. I love silver if we break 35. If we break 35, get into the 40s, silver could be a really, really good trade. This could be a great catch-up trade with gold versus silver. If this gold-silver ratio ends up falling back down, I would like to see if silver price, the spot price, is above 35. If we're above 35 and we get into the 40s, silver gets pretty exciting. So something to watch. Bitcoin, overbought with divergence. I fully expect the technical pullback. I still think it's a chance to accumulate. I would still be adding more exposure in here and in here and even back at the lows. If all this is a range, it's going to be a little just disappointing to see a range trade. But also we could see the range of the markets, right? Maybe the market's not going to get all-time highs. Maybe the market's not going to get to the recent lows in April, but we have something sideways. Make sense? I mean, is it possible that the market is not going to make anything good? Like it's going to be a trader's market. If this is what 2025 looks like, it's going to be a trader's market, you know? And maybe we're unclear. But having the markets pull back a little bit, I would say I'd welcome that. I mean, my gosh, like welcome a pullback here. Everyone's going to get nervous if the market starts to dump again. But I still think there's just so much good structural support in here that buyers would be interested. And again, I may not like buy immediately, but I will certainly be interested in positioning for option trades out of the way. I'll like intentionally position like 1-1 trades and ratio spreads at these lows because I don't think we're going to hit them necessarily, but I want to see a slight increase in volatility so I get more premiums. Yeah, but we'll see. So if this market just keeps going higher, then okay, cool, I guess. But I'd almost like to see a slightly lower high, and we can just have a wedge. This is a good trading environment to make some money. There's income trades galore in here. You can sell a lot of covered calls. You can lower your cost basis. You can do a lot of things and help your portfolio, right? You're not just going to get crazy directional profits, but you can certainly, option trade your way to a lot of income, which is likely what I'm going to do. Okay. All right. Where are we at for the day? Looking better. My broken wing on the day. Now showing a little bit of profit. Okay, good. I'm going to set this take profits. So 80 bucks is on the day. Let's see if I can go after that one. All right, I'll go after that. Chart I'm set at the highs. I've got SPY. I'm watching for a SPY 595 level, and I'm watching for a SPY 600. That's hopefully by tomorrow. For the week, I don't know if this market's like crazy high for the week, but it's mostly just that gap on Tuesday. From Friday to Tuesday, the market, that's pretty much all the gains we've had for the week. So it'd be nice to see it sustained. I've got to sell a bunch of calls tomorrow, roll a bunch of calls. We've got some May 30th expirations I need to review for everybody here. So SPY, Bitcoin, the 61 call, Intel diagonal spread, Tesla rolling covered calls, TLT probably rolling again. I mean, I've got most of the profit on that one. I'm gonna roll this one again. IWM rolling that again. Snap, I've got to replace a collar trade. Futures is going to be down. That was a hedge that didn't pay. No big deal. Lyft puts are worthless, but stock is up. $3 a share. SLV. Okay, so my pressing expirations to this top like 8 symbols. That's going to be all action for today and tomorrow. All right, back to Bitcoin. Right, I was just mentioning Bitcoin like this. If we go sideways in Bitcoin, then I think we're going to also go sideways in the markets where we may not make new highs, right? But if all Bitcoin is doing is pulling back a little bit, finding some efficiencies in here, and then we make all-time highs again, then sure. Like markets are going to make all-time highs, Bitcoin makes all-time highs, off we go. But I'm still going to be focused on accumulating. MicroStrategy pulled back. I'm still looking at this one's out to June for an income flip. Coinbase, I like to see some pullbacks. Ethereum, I'm not trading it. This would be the only trade I would take would be like an EETH or ETHA. Those are ETFs, but probably not my favorite on either one, to be honest. I'll just stick with Bitcoin for now. Copper. Are we getting a copper trade? Copper trade. All right. Making a couple bucks on this butterfly spread. This one is Swiss franc. We're looking at the Swiss franc. It's the inverse of the dollar Swiss. Japanese yen. Kind of a lot of volatility today on the Japanese yen. This is interesting. Swiss and Japanese yen. Weakest of the morning. Now they're making their way back up. Dollar was the strongest of the morning, making its way back down. I think that just kind of shows what your safe havens are for 2025. The dollar's not being treated like a safe haven. The Japanese yen and the Swiss franc are. Okay, so if the dollar is down, you're getting some euro gains. But yeah, I mean, safe haven is mostly flows with a Swiss and yen right now, which is why Swiss yen is probably my least favorite trade. If you're trying to trade something on Swiss yen, it's like they're pretty much in tandem. It makes it pretty challenging. Nikkei starting to make its way back up. Let's see what my EWJ is doing. Oh, come on now. Let's see some fresh highs on EWJ. Fresh highs. So this is the Nikkei with the bottom 15% taken out. So it's performed better than the broader Nikkei 225. I do have some exposure on EWJ right here. It's up around 2,500 bucks. DAX just off all-time highs. FTSE just off all-time highs. Just off all-time highs. China still sideways. Brazil above the 200 moving average. Latin America above the 200 moving average. I still like those trades. I'm still long on both. Mags up today on NVIDIA. Another one that, keep an eye on it. I could see this as a buying opportunity. We come back and maybe do a gap fill here. If we do a gap fill, it's like Mags could still play a pretty decent catch-up trade. I don't know. I mean, it's funny how we go from, oh, it's so much concentration, Mag 7 needs to rotate, to now everyone is just like pumping money back into the Mag 7. And honestly, if we get back to highs again, it's probably led by Mag 7. It's been a bit of a broader market rally. Yes, I would agree. But that was because everything was cheap in April. Right? Trade on platinum. I'll look at platinum futures. So platinum futures, and I've got this marked up on my charts here, but I've been watching this one for a while. I don't have a symbol to trade it in Tasty Trade with their futures offerings, but I mean, I like platinum as a trade that would be, if it's offered back into this zone around 800 bucks, I would like to buy it. I mean, I think this is a very strong support level. So it's coiling. I mean, I think there's money to be made in here. If you're looking for a bigger picture move, it's like, I mean, I could see this being a great trade, but you got to be willing to hold it. Hard part is if you're trading platinum futures. I mean, maybe there's an ETF that's like, all right, if I'm long platinum, is there a platinum ETF? What? You can play platinum. That's futures. CFD, that's non-US. So PL's futures. Platinum shares. I mean, maybe PPLT. Does it look at all like? You just don't have a lot of history on this one. But if this is, I mean, this is similar. If I just, bought this, I can buy and hold, and I think, yeah, platinum, and eventually squeezes out of this thing. So that, I mean, because I don't trade platinum futures, it doesn't have it in Tasty's platform. I do like, this low. It's like if I put, $1,000 at it here, $1,000 at it here, eventually this breaks. Do we get to all-time highs again on platinum? Maybe. I mean, that's 100+%, right? I mean, that's 90 to 100% gain for whatever I decided to allocate. So I mean, I've been watching this. I've seen a lot of these like futures feeds where got some currency futures, bond futures. Like, I mean, bond futures are probably just scalper's paradise right now. Just like buying and holding and seeing a little bit of a pop up. I am actively trying to lower my cost basis on TLT, to turn it back into income, but not really keeping a bunch of bond exposure. We'll see. Does that help on platinum? So I mean, I like it. PPLT. I'll just remember that ticker. I'm going to add that in here. So PPLT. I'll throw that in with my gold and silver. Actually, I'll throw this in with futures. There. Anything on the yields today? Still way off the Liberation Day levels. I mean, I'm going to watch this one. This is where I locked in my rate for the house. I'm closing on a house tomorrow. If we are, that's around 4.1. So if I see the 10-year down to like 3.1, then I'll be having a conversation on a refi. It's worth it if at least I'm in the house for 5 years and a 1% improvement is worth the refi. But if it's not, and we just stay here sticky, 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 we're going higher than 10-year yield, higher than 20-year yield, global yields are rising. I mean, maybe we don't see any big improvement unless there's trouble ahead. Okay, what else? Let's go heat map today. Vinviz. So 56% of stocks advancing, 38.2 declining. NVIDIA is the big star with the bright green. Tesla's up, Amazon's up. What's getting hurt today? Sector wise, Uber's down almost 4%. Salesforce is down 6%. They had positive earnings. Salesforce had positive earnings. I don't know if their guidance was rough. They beat top and bottom. Boosted its revenue. Downgraded Salesforce. Okay, interesting. Looking at the expected move here, 76 is down about $18. I was curious what that one would have been price wise. Hims pulling back. Palantir at the highs. Carvana. Actually, like, how is this? Oh, it's still going. Serum down. Little toppy there in O'Reilly, Zillow, Uber. Uber pulling back off the highs. Lyft also pulling back. I still like Lyft. I mean, I'm gonna try to hold this thing into the 19 or $20 handle. Sector wise, let's go year to date checks. So year to date, we're flat in the S&P. What's performing well? Industrials, utilities, staples. Tech is now turned negative, which is interesting, but also tech was beat up so badly. And this is kind of wild. Like financials, industrials, utilities. Again, I mean, rotation wise, this is either the last leg of a bull market or this is a rotation into things that are more defensive. This is one thing that will happen if the dollar gets weaker. If the dollar gets weaker, money will flow into more defensive sectors. So if your idea of like I'm just going to be long tech, this may not be the year to be long tech. If the dollar remains weak, you're going to see money flowing into more defensive plays. Healthcare because of UNH, probably the reason this thing is down. I've taken a couple of stabs at UNH. I had money on the 165 by 160 just because of crazy high premiums. I'd like to see if that can just gap fill in the 300s and get me that 265 by 270. Let me check old Spotify today as well. Hopefully Spotify is back below 660. 651. That's good. That's looking better. I want to see if this one can return like 6. Well, I'll just put a chart over here like 620. So I put on a double broken wing butterfly. So I have this one up here with a 670 pin price. This one down here to 470. This one is pretty much in full profit. This one is still in a drawdown, but the trade looks like this. We're trading at 651. So let's put 651 here. I have a broken wing call fly. And all the way down here, I've got a broken wing put fly. So nearly full profit on the put fly. I have a trap here. I mean, I make money on this trade as long as price is, I'd say between 682.25. So as long as price is less than 682.25, I don't have any risk in the trade. So if it stays where it is, I'll make about 250 bucks. If it gets in the profit trap, like 660 to 670 is a profit trap. Every dollar is $100 in gain. So anyway, we'll see. I'm just keeping an eye on this one. The easy trade is we fall on Spotify and I take profit on the call fly, profit on the put fly, and keep my 250 bucks. That's what I'd like to see. All right, what else? Somebody's asking about a day on gold, meaning what? You want like just today? So you want to go down to a smaller time frame? I mean, all I see on gold in the smaller time frame is you're scalping. You're scalping a 5-minute buy zone, and that's it. Like trade would have been at 5:30 in the morning. You're on a 1-minute time frame. Trade's been running bullish all morning since 2 a.m. So, I mean, if you want intraday stuff, it's like I'm going down to the 1-minute time frame, and that's what I see. So this thing's in a buy zone here, chance to buy again, ride this thing up. Like that's a great trade intraday. So my go-to is if I'm doing intraday, I'm going back to 2007, 2008 when I first learned how to align my time frames. You know, if you like the big picture of buying something, go down to a 15, 5, 1-minute chart and align your levels. And as long as they're showing buy zones, you're good, right? So 15 was pretty extended away from the 200 moving average. And if it's finding support becoming or resistance and support, if this is going to bounce, then you look for your alignments. And look, some traders, you don't even need the other time frames. I'm like, if your overall thesis is you're bullish on gold, then you're just looking at every opportunity to buy it. It's that simple. If you like gold and you think that the better trade is going to be bullish gold, then anytime you get a chance to buy it, you're long. Pulls back again, you buy it, stop loss, there's your trend, pulls back again, you buy it, you're long. I mean, you can repeat that. And there's tons of trades in here if you're that trader. Okay. I am not day trading. I'm not scalping like that with gold. I am waiting for a bigger portfolio position, which is I think gold is still a bullish trade, but I'm just waiting to see, can we get a pullback into here? Can we get a pullback into some more attractive levels? Then I want to see some gold revisit highs, maybe go to all-time highs. Make sense? So there's my gold. All right, what else? Any other currencies? I'll take a look at top-down currencies, and then we'll kind of wrap things up. If you have some symbols you want to throw it at me, we did the dollar, we did oil, we did silver, we did gold, we did Bitcoin. Mag 7 NVIDIA was the big news today. GDP came in negative 0.2. I don't know if this week's GDP reading is it the big scare, or is it going to be next quarter? Well, I would imagine it's going to be more next quarter. Why? Because that would be the potential. Oh my gosh, we had 2 contracting GDPs. That is a technical recession, but we might not get it. We might have a -1 this go around, and then going into next quarter, maybe everything's okay. Right? Okay. So still watching intraday price action today. There's my SPY. There's my SPX. Just watching, just hanging out. We'll see what tomorrow gives us. So a couple levels that I'll be watching. I have this level it was a 58.05, so I'm going to put a note down there. 58.05. So for tomorrow, I have a tiny little $25 risk for a huge profit trap here. Today I've got the broken wing put fly. Up here I've got some butterfly call spreads. And so if price goes up, there's a chance to make some high reward. If price goes down, there's a chance to make some high reward. For today, I just want to see price just kind of stay exactly where it is and turn today's trade into some profit. So this would be my winner today. Tomorrow, I'm willing to sacrifice one to make money on the other. I just want to see price go somewhere for Friday. So if it goes up, levels that I'm watching, let me go back to this for a second. So levels that I'm watching, we kind of been dancing around here all day. And I'm wondering, are we going to hang out at 5,900, maybe 5,925? Maybe I could toss a few bucks at this today as well. Let me see what this trades. If I went end of day today, 5,925. Okay, and go 10 wide, 10 wide. Did that backwards there. So that's going to cost me about $100. If I went a little bit tighter, can pin this thing. I mean, I'd risk about maybe $20 to $30 on the trade. If we close somewhere in between, it's like I can make some bucks on this if we're close to that 59.25 level. I'm going to see if I can get filled for 475 in this trade. And then the 5,900, same thing, 5,900. And put, call, see if we hang out around those levels, 4.80. Yeah, I'll let those marinate. If I get either one of those filled, again, small reward, high risk, end of day settling, it would be this. If price is going to go and just kind of dance around these levels for the day, and maybe it closes near them, then I've got a potentially $480 winner to risk $20. Um, I don't know, Lee. Lee's asking about the taco trend yesterday, which is came out yesterday. Trump always chickens out. My concern is that he's going to double down on some tariff talk. That's my concern. I hope that he doesn't. I think that clearly, in April, if it meant anything, you can see what doubling down on tariff talk does. So I hope that's not the case. But that's like the big unknown. It's like, I mean, look, every day there's going to be something. It's going to be something Donald Trump. It's going to be something market related. Like it's just crazy how it's like politics and markets are intertwined right now because it's like the most in your face noise that I've seen in a long time, pretty much since 2016. You know, but now, yeah, I don't know. I mean, it's like any slight to President Trump, he wants to be vocal about it. He wants to go like head on and fight it. It's kind of his abrasive personality. So I don't know, but I think it is nice to see like the courts got involved and say, look, the way that we rolled out this whole tariff program was not accurate, and you can't do that. And that was the question like from day one. It's like, can we actually do this? Can we do it this way? And I guess you can't. So, also a lot of things, and this is a big concern. All these executive orders can all be taken away. Like after midterms, all these executive orders can be repealed in 2028. All these can be repealed, and that's my biggest concern going forward with the U.S. political system is that the last party was always the worst party. The current party is the best party. We're going to undo what they did. We're going to do things better. Realistically, nothing gets done, and we're operating on these 2-year cycles because of midterms, and it's just not great. So at the end of the day, look, trading the financial markets, the markets do an incredible job of getting rid of a lot of the noise. It might react to the noise. Obviously, we had a lot of noise this year, um, but you can see that the markets are very reflexive and able to, I mean, price out stuff, get rid of all the noise, price out what's really happening. So the recession fears have gone down. Gains and resiliency and employment, like everything's been pretty stable since you know April 9th, basically. So yeah, I mean, to answer your question, I don't know. I mean, going forward, it's your guess is as good as mine. It's just something that I'm not trying to lose any sleep over. So I mean, we know we have a vocal president. He's not going to stop talking. There's going to be headlines every single day. He'll still find his way on the economic calendar somehow. So just I'm saying like I'm not taking any crazy silly risks. It's like that's all there is to it. As much as I've enjoyed this little melt up, I wish I was more aggressive. I think I was pretty darn aggressive since the lows in April. But once we started to hit that roadblock, right before the U.S. China trade gap to the upside, like in this area, I was extremely aggressive. And I think that was like what rewarded me. I mean, that's how I was able to get to all-time highs again for the portfolio for the year. But this little melt up, I mean, notice how we haven't gone anywhere, by the way. We're up, but we are sideways. So this is like the next big hurdle. It's like the good thing about the bulls is that they have held up here above all these moving averages. To me, I mean, I don't see the bears doing too much damage. If they come back and retest these levels, that's probably a buying opportunity, right? And if they test these levels or maybe come a little bit deeper, it's like as long as we close back above it, bulls are back in control. So this went from what could be bear a bear market rally, right? If the market's paused right here, that would have been a bear market rally. But they gapped higher, and now we're spending 1 week above, 2 weeks above, 3 weeks above. We're 3 weeks above all of this technical resistance. So the probability is shifted now where it's like the bulls are in control. And even if the market's going sideways, it's just a matter of accumulation. I think that this is going to be more of a accumulation zone. If it falls a little bit, so be it. But I think that's a buy the dip, and we're trying to get back to highs. So that's why I've said like the most difficult trade right now is if this is even if this is a distribution phase, are we going to go higher or is it an accumulation phase? We're going to go higher. I would like to see a little bit of a pullback. like just have this rally check just a smidge. Because I'm a bull, man. Like I'm trying to buy something better. I'm trying to buy some discounts. I'm trying to sell some options that give me a bit more premium, instead of just seeing melt up, melt up, melt up. But I go back to what I showed earlier, like look at the yearly chart on the S&P from 2019 to 2020 to 2021. The S&P was up 90%, right? It was up 90%. So we can have a crazy run like that. But the difference is the Fed is not dumping money like it did back in 2020. We're not spending trillions of dollars. We are potentially raising the debt ceiling. We are potentially increasing the deficit. We are seeing global money supply increase. So that is all happening in the background, but it's not to the same degree as what we had back in 2020. Also, one thing that's interesting, I don't know if I have I might have run out of screen space here, but I did take this one. This is the $7 trillion that are sitting in US money market funds, right? There's still money sitting on the sidelines in the US. Now, I don't know if this is $7 trillion because the baby boomers are one of the wealthiest generations. And so what does that mean? They're not taking risk right now at 65, 75, 80 years old, nor should they be. So what are they doing? They're benefiting from, a measly little 4.5%, but it's 4.5% that's risk free. It's illiquid, but it's risk free. And if they've got, millions and millions of it, it's like, do you need that much? If you've got money market instruments that are yielding 4.5%, I mean, it's essentially risk free. It's not really staying ahead of inflation. It's not really staying ahead of your debasing currency and loss of purchasing power, but it's not hurting too badly. What would hurt too badly would be that we've got like higher inflation coming. A mild case. I don't know if this is kind of an oxymoron, but a mild case of hyperinflation. But this money's on the sidelines, and from a from a sentiment standpoint, either this crowd is not going to take risk, and they're just going to sit in money market instruments, or I see this happening two ways, right? This money does the following. Okay, either one stays risk free and collects, 4.25, 4.5, like whatever you can get for a current yield, right? Or it stays risk free because you could do the what would it be? What's the TLT and chill? Is that the thing? Or just say risk free and chill, which is you just look, if global yields are rising and you can still get a 4.5, 4.25, maybe goes up to 4.75, 5%. I mean, it's going to be hard to get people that don't need to take the risk, don't want to take the risk. It's going to be hard to get them off the sidelines if you're still getting 4 or 5%. Because in their mind, they're thinking that inflation is 2.3%, 2%. Well, as long as I am yielding, 4.5%, they think it's like you're just not having the pain of like losing a ton of cash. The reality is you probably need to make about 6 to 8% a year just to stay ahead of debasing, loss of purchasing power, and inflation. Realistically, that's what's happening. Okay. But here's the rough part. This crowd comes back into risk because yields drop, right? And what about timing? Okay. This money, if all of a sudden yields drop to, let's say the 10-year drops to 3% or lower, let's say the Fed cuts rates and all of a sudden banks are only offering like 3% on a money market instrument, right? 2.5%. It's like you're barely, if not losing, you're losing money at that point. Is that going to force people out of risk free and go somewhere else? Where? I don't know. Maybe gold, maybe back in the equities market. But the timing of this is like if $7.2 trillion decides to come back into the markets near all time highs, I think that's going to be like a bubble bump, but the timing of that would be pretty terrible. Like, I'll ask you this: if you had $7 trillion and you want to put it in the stock market, would you put it in right now? Not all of it. Certainly not all of it. I mean, I would dabble, but it's like I would be leveling in anywhere between now and another 10% lower, or it goes up and then you get another 10, 20, 30% pullback. It's like it would be just bits and pieces that you'd have to like bite into the markets, not just dump it. But you never know, And so if people are watching yields go down and they're feeling like their hand is forced to get back into the markets, If we're sitting near all-time highs, it's like I could see that being money on the sidelines that gets us, a little bit of a bump. But that crowd, I think like the timing would be terrible. You know, I don't know. But ultimately, what's the market try to do? It just tries to make all-time highs. That's what it's trying to do. You know. So I just thought this was interesting because like this is a ton of cash, and look, you always hear about this. Nobody's participating. Money's on the sidelines. Money's on the sidelines. Look, it's always on the sidelines. There's always money on the sidelines. All we do is see money sit somewhere. And I mean, the fact that risk-free yields have been, 4.5. I mean, in my Roth IRAs, I put a handful of trades in that were like 5.25, 5.5%, and I locked it in for over a year. I hate doing that stuff, but it's like it was easy. I did one for Goldman Sachs, one for Wells Fargo, one for JP Morgan. It was like all 5.25, 5.5% money markets. Okay. Well, once that year was done, I mean, what's it offering now? Foreign change. So I cut it and I'm investing elsewhere. But I dabbled. I mean, it felt pretty easy to grab, 5% risk free, 5.5% risk free. But it underperformed, as it always will. But that's the trade off of being in equities. There's going to be drawdowns, there's going to be risk. Your average return at the equities market is about 8% to the upside, but your average drawdown is 13%. That's history. So as long as you can deal with that, like reward to risk ratio, that risk adjusted ratio, I mean, obviously the upside could be 20, 30, 40%, but the downside could also be 20, 30, 40%. So it's just a game. It's just a big game. But there's a lot of money sitting on the sidelines still. I'm wondering if this does anything. Does this money come out and play? But if yields keep going higher or yields are sticky and hanging out at 4 or 5%, maybe it doesn't entice anybody to do anything other than just sit in cash, right? Like this is sitting in cash. It's not hurting, but it just depends on your financial situation. If you got enough assets where you can sit risk free and get 4 or 5% and you're able to live comfortably, I mean, I wouldn't want to take any risk, So anyway, just some thoughts. All right. I think I'll wrap it up there for today. Just final thoughts. Dollar wise, if we revisit lows on DXY, I'm looking for that 1500 level on euro dollar. Index wise, I mean, we have 3 weekly indecision candles, right? I mean, it's not indecision, but like because of that US China trade gap, that candle is my resistance and my support. So that's 57.60 highs, or I'm sorry, 59.60 highs and 57.70 lows. That's on SPX. So if we're going to dance around in here more, it is what it is. I could see the market doing nothing for the next, couple of weeks. Maybe not going anywhere. Maybe fake outs, maybe not going anywhere. I'd love a pullback. Doesn't change anything, right? A pullback to me is a buying opportunity. Look at the daily time frame. To me, this is really good support. Really good support, right? If it pulls back deeper, I mean, here's an easy way to trade this. You get some support, you take a bite. It comes back down below. If it's at a decent level, I'd still take a nibble, but I'd be looking to add more to it if it gets back above this cluster of moving averages. So it's like, I don't think we're coming back to break the April lows. I think we can, test some gaps. We can fill in some liquidity levels here. If this is a reversal pattern where we have this as a potential pullback zone, it's like, yeah, we can do all sorts of stuff here. Fib wise, low, high, pullback anywhere, 30, 38, 50%, 61%. Doesn't take out the low, right? But do we get some accumulation to then revisit highs? So again, hardest part right now is feeling like I got to be patient because I'm getting annoyed with this market melting up higher, but yet in the last 2 to 3 weeks, it hasn't really gone anywhere. It was one pop on the U.S. China gap, and then the market hasn't eclipsed those highs yet. So we're sideways. We're not falling down. We're not pulling back. I'm not bearish. I'm trying to be patient. So all right, I'll let you go from there. All right, have a good rest of the day. We'll see you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.